Good afternoon. This is Todd Horwitz, coming from the floor of the CME Group in Chicago. And as we continue to watch the 30-year treasuries, we see the, we'll call this the Fed game. And of course, the game is the balance of trying to keep interest rates low while trying to balance the economy to get some inflation. And of course, they've been driving very hard trying to keep these rates low, but they seem to be getting a little bit out of control. As we saw last week, there was a big China story that when the bonds got down to the 149 level, getting close to our first target of 147, all of a sudden China was no longer going to be a buyer of U.S. treasuries. And of course, we know that's really not possibly true, because it's the old story. They've got so much of the United States debt as it is that there's no way that they're not going to be a buyer of treasuries and looking for rates to move either. So when we look at the bigger picture, we see that the markets are getting a little bit of a dead cat bounce off of that very hard sell, and interest rates are starting to rise whether the Fed wants them to or not. That is one of the things that happens when you start to see growth in an economy. You're going to see natural movement that has nothing to do with the QE programs or the Fed or the manipulation of rates or dollars. And I think that's what we saw, is there was a lot of pressure on the US dollar trying to keep rates under control as well. But we're looking at this as just an opportunity that rates are going to rise and another opportunity to sell bonds. And we're looking at the 151 to 151.5 level as our next sell point, as we look to target our next downside target of about 147. Again, we can see all of the game that the Fed is playing, trying to work this over, looking for their spots. But at the end of the day, it is proven in history that they have not been able to time the market, nor has anybody else. So what we're going to look for is for rates to rise. We're going to look for the bond futures to fall and look for fixed income to start becoming overall more active. That's the way I see it. Look for bonds to drop down to about that 147 level is our next target. And we'll check it. We'll continue to watch these. That's the way I see it. This is Todd Horwitz, coming from the floor of the CME Group in Chicago.